Hey, it's Matt Bennett, grain marketing consultant with Beck's here to talk markets today. Got a few different charts to look at. I just want to kind of walk through kind of what I'm seeing going on with the markets, some big picture stuff as well. Basically, obviously, our corn and bean markets haven't looked worth a darn here. It's just been pretty tough sledding, is all there is to it. But what we're going to do is going to look at some charts and kind of where I see things going now. A week ago, I showed you this chart. Basically said, hey, we need to see March corn. Kind of it's been in this wedge. We need to bust out of this wedge, if you will. What's happened clearly is that we did not bust out of the wedge, and so we busted out of the wedge, but we busted out of the wedge the wrong way. That's what the chart looks like as of about 10 minutes ago, as I record this podcast here on Wednesday at 10:30 Central. So obviously, March corn has fallen through long-term support. As you can see here, it's kind of fluttering around this red line, which is your 100-day moving average. I think if you move below that, you've got to start looking back at October and, moving down under 430, unfortunately. And who knows? I mean, maybe you test long-term support. Now, from a demand standpoint, from export standpoint, corn has just been a star. But what's really hurting this corn market at this point, in my opinion, is the fact that this bean market's just really, really been on the struggle bus. You've taken, 50, 60, 70 cents out of this market, depending on which contract you're looking at. It's just absolutely plummeted, even more than that on some of your front months. So, we see November beans, for instance, which we'll talk about here in a little bit. They really went downhill about 50 cents or so. So, you look at the December corn chart and, you see this long-term support again has been violated. Clearly, December corn last year, spring insurance price was 470. Didn't look very good to a lot of us. Some of us are sitting here wondering, how in the world are we going to make sub 460 work? Clearly, it doesn't work all that well. But from a technical standpoint, it's trying to hold on to this 100-day moving average. Maybe it finds a way to bounce in here. But again, it's got some things working against it from a technical standpoint. The chart doesn't look good. Looking over at beans, unfortunately, November beans going from 1130 to 1080 did nothing to help for instance, an acreage discussion, and so it's not a good looking chart whatsoever. Let's go to beans, make us feel a little bit better about corn. But your March soybean chart, we talked last week about the gap in the market, and clearly, as you can see here, we filled the gap. We were hoping to find some buying once we hit the gap and filled it. I put the line there to kind of show you where it is. We're down here at the 200-day moving average. It's the last of the moving averages below the soybean market. Are we going to bounce off of it? It remains to be seen. This market is very oversold. It's in a position right now that it was in back there in the fall time frame whenever we really had a strong bounce. Does that mean we're going to get that kind of bounce? Yeah, I don't know that that's the case because we obviously had some really good news going for us. Weather was still a big unknown in South America. And of course, we had the announcement with the U.S.-Chinese trade deal. So, it's pretty tough for me to sit here and say that we're going to be able to bounce the way we did before. But by all means, the selling pressure should be somewhat alleviated as compared to what it was previously. You look over at Nova 26 beans. It's the one chart we have that hasn't broken under your long-term support. It's trying to hold on to this 100-day moving average. As you see the red line coming across, you've got the 200 down below it. The 200 is actually below your long-term support that you see from the line that we drew here. November beans, again, I mean, the problem with beans is that from a domestic standpoint, we're quite snug, as I talked about here last week. From a global standpoint, we've got all the beans in the world. And so bottom line is, whenever you look, for instance, at November beans, you could still see more downside here. Now, I'm looking for a bounce before I get aggressive. Most of you that I've talked to have said, hey, I can't make 1030, 1040 fall cash prices work, especially at normal yields. If I had above average yields, maybe you could make it work, but you're 10 months from harvest. It's pretty tough for me to get super aggressive here. Let's just give you a little update on the Chinese soybean purchase tracker. Now, this is only confirmed sales. All right. Now, one thing that we've seen a lot of here lately is unknown. Unknown stepped in and bought a fair amount of soybeans. And so, as far as this goes, we're looking at maybe 7 to 8 million metric tons purchased already is what most of us in the industry are kind of estimating. And so, to be perfectly honest with you, a lot of frustration with not knowing exactly when they were supposed to get the 12 million tons purchased. But it's been a pleasant surprise. Again, this morning we had more purchases from China. No doubt that from a purchasing standpoint, it's been a pretty good run that they've had here lately. A steady flow of positive demand news on the export front, but at the same time, those are not shipped yet. And we do have some issues whenever it comes to shipping, and Mississippi River continues to be at very low levels. Now, if I look at fertilizer prices, I just want to look at a few different things. Of course, anhydrous ammonia is up, from what it was a year ago by a fair amount. Of course, December corn still, again, is below last year's spring insurance price. You look at liquid nitrogen, and it's taken a little bit of a dip here lately, but is significantly above what it was just a year ago. DAP, of course, we all know DAP has gone up. That's been one of the more challenging issues that we've had, looking at other input costs. I mean, clearly urea is up just a little bit from a year ago. Now, the one thing at the bottom there, of course, is potash. Potash has been a nice thing in that it hasn't skyrocketed and taken off like, some of your other modes of fertilizer, but clearly, it's not cheap. I mean, it's cheaper than what it was in 21, 22, 23, whenever we were making a ton of money. But by all means, it's been better than phosphate. Let's just put it that way. Now, diesel, I want to talk about farm diesel prices. So, clearly here lately, what we've seen, since this chart was posted by Farm Doc, is that the crude oil market has plummeted over the last few days. And so, you look at January crude oil, and no doubt about it that you look from a long-term standpoint, this is about as low as what we've been in a long time. Now, does this mean that we can't move lower? No, there's no doubt that this market could move lower. But at the same time, if I'm booking needs as far as diesel fuel is concerned, booking those needs at the lowest prices we've seen in several months, is probably not a bad thing. Now, I'm not saying you go out and you do 100%. But by all means, booking some diesel fuel at this stage of the game seems to me, on a percentage basis at least, whatever you're comfortable with is probably not a bad idea, because it's cheaper, than what we've seen in some time. And so no doubt I want to be paying very close attention there. Now, you look at the US dollar chart, and I told you I was going to talk some big picture stuff. US dollar has really fell off here over the last few weeks. You look at mid-November, of course, you were pushing up on $100. Right now, you're in that 97.5 type range, 97.5, 98. And so clearly, from the US dollar standpoint, the cheaper it gets, typically, the more people want to own commodities. I want to see how this is played out for commodities other than the ones we're really interested in. And the stalwart of this trade lately has been precious metals. And I know what you're thinking, why in the world would we be talking precious metals? But I just want to point out a couple things. The gold chart is the upper left-hand corner. It's not at an all-time high as we speak this morning, but it's just running a small amount below the all-time high. The chart on the right is the silver chart. It's an all-time high as of here on Wednesday. We've posted multiple all-time highs over the last 3 or 4 weeks, actually. The old all-time high was $50. and you're trading silver at $66 here this morning. Clearly, it's just absolutely taken off. You look at palladium is the one at the bottom, and so palladium is an all-time high as of this morning once again. And so palladium over really the last 3 weeks has actually rallied from the mid 1300s up to over 1700. So, what are you seeing happening? You're seeing that money is going towards safety. You're seeing that people are looking at some of these commodities and saying, hey, I want something I can get my hands on. And so you ask, when are they going to actually step in and buy, our ag commodities? I want to make sure you've got my contact info for those of you that don't, because several of you guys have wanted to ask questions. But, one thing about the physical commodities is that whenever we're in situation here where, people are trying to move money around, at some point, you've got to think they're going to want to own some of these ag commodities. They should look cheap to them, but to get that to happen, you're going to have some sort of a story. I can't tell you what that story is going to be. Right now, South American weather in totality looks fantastic. Most crop estimates for Brazil are 170 to 180 million metric tons. It's just a massive crop as of right now. Yes, the weather could change, but the forecast does not look conducive to us getting some sort of a weather market there. Argentina is still a little on the dry side, but most forecasts are trying to bring some rain into them. What could be something that could rally our markets here? I've talked quite a bit about the fact that world and U.S. demand for corn is an all-time record. Just because they have a big first crop in Brazil doesn't mean that the second crop, which is typically, the safrinha crop, it doesn't mean that crop's going to be a big one. And so with us having massive world demand, the weather for that safrinha crop is going to be very closely monitored. Obviously, we're going to be talking a lot about acreage in the next few weeks. The January crop report, there could be some surprises in there, but let's just be real. The funds are not going to step in and buy these ag commodities until they have a reason to do so. So I sure hope that we can get some better news as we go in towards the end of the year. A lot of times, they say that the Bears get Thanksgiving and the Bulls get Christmas, but right now it doesn't seem like the Bulls are have a whole lot to chew on. So it's been a pretty rough go in here, but we'll do another one next week. Hopefully we'll come up with some better news for you. But if you have questions, comments, leave them in the comment section on the video. Shoot me an email, get a hold of me, and I'd be glad to cover anything that you guys want to have me cover. Have a great week.